I'm going to go through our free indicator. This should help you massively with the trend and momentum of the market, making decisions easier. Yes, it's free. We've created an indicator that puts crucial data in front of you so you don't have to think as much in terms of understanding certain things, certainly like the divergences and why certain things do certain things. They're color graded. It makes it easier. I will explain. You do, however, need Tradingview for this indicator. You can't just put it onto an exchange account, but that's pretty simple to set up anyways. This, like anything, is not financial advice. But what it does do, it speeds up your process of learning to see things. Let's get into it. So first and foremost, let's get into the obvious. What does it do? Okay, we've talked about this in another video. Feel free to stick around to the end, and I'm going to go through the professional version and the free version so you can get a difference. Now, it's very, very similar. The overall indicator works in the same way. We have the RSI. We've color coded it. We've also had price asset bars, which will give you an idea of what's happening elsewhere in the market, so you don't have to worry too much about it. Now, this is predominantly crypto. Maybe if you subscribe and stick around and you see further videos, there might be new versions of this, which is completely free. There might well be a one for the stock market too, potentially, and the FX market, because we can make them happen, right? Now, this goes for everyone. You need to understand trade trend bias, right? You don't want to go long when the market's looking a bit rough. You don't want to go short when the market's looking bullish. You want something to add confluence with it. So this is what this does. So as I say, the RSI is color coded to give you bullish, bearish, and also neutral trends, which is hugely important, by the way. Now, asset bars, in terms of the trend analysis, is simple. It will give you a very, very simple bit of information. Is it bullish or is it bearish for that asset? So if you're trading, say, I don't know, Polkadot, you want to see what Bitcoin is doing at the same time, because you don't want to go short on, say, Polkadot when Bitcoin's strong, for example. You're probably going to lose out potentially there, right? The one element to this compared to the professional version, which I'll show you both of them, is you cannot change things on this. This is kind of set in stone. It does show some divergences. It does show the trend assets, and it also shows the colors, which is hugely important. The professional version, you can customize them, right? However, it makes it simple if you understand the free version first, right? So how do you get this on your chart? First thing you need to do, go down to the bottom. So there's a link in the description, and you need to go to add to favorites. So once it's added to your favorites, you then need to go to your Tradingview account, and you will then find it in this section here, right? So if I close this off, go back to indicators, and I will now see this version. This is a pro version. This is the other one, right? Now, we're going to do it fresh from out of its box. The pro version's at the top here. This is what I've got currently and what I'm using. This is a free version. So we're going to compare both of them in a second. But what I want to do first, I want to hide this one so then it's a bit more obvious, right? So let's look at the markets here. Now, it's entirely up to you how you want to read this for obvious reasons. Now, it's kind of obvious. Everyone does investing differently. Everyone does trading differently. But the one thing that this does give you is a little bit of certainty versus other market indicators. Why? Because it adds more of it together. It gives you an idea of what's happening, right? So, for example, 4-hour time for MBMB. The certainty here is telling you three things of information that's very, very clear. One, it's giving you a divergence, right? The second bit of information it's giving you is it is starting to turn red in terms of the trend. The trend is below a certain metric and it's looking a bit bearish, right? Therefore going down. The other, and the one that people tend to forget, is what is Bitcoin doing? Bitcoin is also showing signs of red. It's showing signs of a retracement. So that's three bits of information it's giving you straight off the bat. Now, you can customize this to whatever the hell you want, kind of. You can change things. Now, you can make it easier for your inputs for whatever you want to do. Now, as I say, this one's a little bit restricted versus the professional version, but you can change some stuff. You can remove some confusing data. For me, the confusing data for a lot of it is often the BTC pair. Personally, I like to remove that because sometimes with the BTC pair, it moves differently to USD. If you're trading, obviously, in different pairs, you may well want to use that. Personally, though, I don't. Now, again, showing the strength of the asset, I'm not bothered. If you're going to go for it, in my personal opinion, the BTC pair is what you need on there. Now, I personally also remove the labels because I know they are only regular divergences, right? Which is absolutely huge. But also you can highlight when it's overbought and over. So some people don't like that, weirdly. But yeah, this is how I would set it up personally. Obviously, as I say, very restricted versus the professional version, which I will show you. But you can see very, very clearly it's giving you some good information, right? Now, other confluences you may well need. Personally, the moving averages or the EMA on your main chart should also be a factor here to help you. Other things that you need to consider is structure of the charts. Change of characters is something that I like to look for, or the most obvious one is like breakouts or breakdowns, whatever it may be. All those become important. So when we look at the likes of BTC, right? Random example. When we see BTC here currently, in my opinion, is looking pretty wishy-washy, a bit horrible, and we've lost a level of support. But the reality is this has been giving you a bit of a hallmark in terms of what's been happening recently. Why? We are below the 50% mark on the RSI, which is kind of an important factor. For me, what I tend to do, certainly when I'm styling this, I like to make this level jump out. I like to make it one, red, and also a bit fatter. Personally, that's just my approach on it, because I call this a trigger point for a lot of my entries, certainly in the market. Why? Because often when you are above it, it's bullish. Often when you're below it, it's bearish, right? The color coding just makes it more simple, more concise, right? So obviously you can see with Bitcoin here, rejected a big level here, also rejected down here, went into a neutral zone, but it rejected the EMA. It was actually forming a little bit of a downtrend, and then we had this big, massive sell-off, right? That's kind of important. When we look at the likes of Ethereum as well, just to give you an idea, similar sort of vibe, but a bit more extreme. Why? Because look, the BTC is telling you it's currently trading red. May not want to go long there, but also when you're looking at this on the 4-hour time frame, you've got a divergence appearing. Hello, it's not a very strong one, but it's a useful one. But when it goes below this EMA, you can see this very, very clearly. It's looking a bit, not looking great, bro, right? Why would I want to go long here? Why? Because this is also red, and it's also below this red line. That's giving you an indication that the trend is starting to slowly turn bearish. Likewise, so it's just the way the market is. Again, bearish signal here. Why? We've had a big, massive rejection. We've rejected this level, but also this is all red and ugly. Not to mention the fact that it's struggling to actually do anything for the last couple of candles. It's looking pretty ugly, and then obviously the drop happens. You got to look at the color coding. It's hugely important, right? So let's look at a higher time frame just to give you a bit more obvious levels of information. Now, again, when I talk about it, now there's a delay. Obvious. The thing that is a problem with a lot of free indicators and normal indicators as well, there's always a lag between price. This is why you've got to look at market structure. Now, some confluences will always be there, but the one confluence that I can see very, very clear is obviously the market. Yes, massively going into turbo mode, right? There's always going to be a drop. Psychology, right? But this indicator helps you a little bit, because even though at these high levels of overbought, right? Yeah, they're starting to go red right at this top level on this daily time frame, right? Huge. This is also, by the way, if I zoom out a little bit more, this is a Fibonacci level. Bear with me. There it is. It's a Fibonacci top, right? So when you're using structure, cool. When you start seeing, oh, it's looking a little bit weaker on this point, and also not to mention at all, is the fact that this is starting to turn red on the third candle of it rejecting that level on the daily time frame. That is something for you to keep in mind. The thing you need to keep in mind is level structure change, i.e. a change of character. We melted, boom, you're never going to catch these tops, but what happens is it forms a level resistance here, which is hugely important for your next move. Now, when you're using this level here is going to become very, very critical in terms of potential entries. Why? You've got an entry here for obvious reasons. You can see that. It's, what I like to look for, go back a bit, is the fact that I like to look for retests. I like to look for levels of structure that gets retested. On the daily time frame, huge. On the 4-hour time frame, you can probably go for the breakouts, but this indicator tells you very, very clearly that there's a bit of a divergence here that you may want to look at potentially going short. It's telling you very, very clearly, hello. Now, again, multiple rejections at this level, stop loss above there. There's a good chance that when the fact that the market is euphoric anyways, and you get these levels of resistance, there's a good chance you want to probably look at going short anyways. Why? What are the confluences here, Ash? You may be asking yourself. Well, 1, this is red. 2, divergences. And also, it's gone below that 50% mark a couple of times. It's looking pretty damn ugly, right? So there's all kinds of factors here. When you are an investor as well, going through this as a free indicator, you can look at this from a weekly time frame point of view, and use the same kettle of fish. Why? What are you looking for, Ash? Well, if you're above the moving average, cool, that's relatively strong. But when you get the confluence of this being green and above that 50% mark, you could potentially look at entries for longs, for example, right? This happens all the time as well. The other way around from the short point of view, right? Look at this market top. This is starting to look a little bit ugly. Yes, you're going to be delayed and laggy, but this will keep you out the market for longer versus having to just randomly guess and put random levels in, because you might have bought this level here this week here. You might have bought up here thinking it's going to go up forever, but actually telling you here, don't buy this. Don't buy this. Don't buy this. It's looking ugly. It's looking ugly. Even when it's below this point here, it's still below that 50% mark. It's telling you to stay out of that freaking market. And also, not to mention, you are below the EMA 21, which is massively, massively important. So what we're going to do now, I'm going to compare the professional version. So the main difference with the professional version is quite a few things, actually. You can change a lot of the stuff, right? You can obviously, the labels are totally the same, but a lot of this you can change. You can change the length, you can change the thresholds. Most importantly, you can change the divergence lookbacks. Not to mention, it will show you potential and, most importantly, hidden divergences. Bullish, bearish, hiddens, right? Huge. Not to, let's be honest here, the trend price elements, obviously I haven't turned off, but you can speed this up if you want to. If you want to use different moving averages, or most importantly, for a lot of people, they tend to use, certainly in our premium, they like to use a different time frame. So, for example, if you want to look at, say, what the 4-hour time frame's doing, and you're looking to day trade, for example, you may well want to look at what that bar's doing on that asset versus what you would do on the real life price, because it gives you all the information in one place instead of having to flick and toggle around different time frames, which is also very, very important. Now, again, it's exactly the same, but you're seeing more data, right? For example, you got this divergence here where pullback, but also on the professional version showing you a hidden bullish divergence, which obviously plays out very nicely. You know, likewise, you can change a lot of the factors in terms of the look backs and stuff. Hugely important. If you go to the 4-hour time frame, you're going to get even more information, certainly with the hidden stuff. But the hidden stuff, I think, works pretty damn well, personally. It keeps you in the trend for longer. It allows you to do certain things. It just makes life so much easier. But don't get bogged down with it all. That's a problem with a lot of people. I think too many people have too many indicators. This indicator alone is a combination of multiple things all rolled into one little element. Trend analysis is hugely overlooked, in my opinion. For some reason, certainly in crypto, in my opinion, a lot of people like to look for tops and bottoms. The momentum is king. Momentum is absolutely king. You can probably make more money going off momentum than you would trying to scalp a top or a bottom. I don't know. I don't understand why. Trends in crypto run for longer. If you can have an indicator that keeps you in a trend for longer, huge. If you can keep something that is going to tell you the direction, even better, right? It works very well. Even on these lower time frames, which sounds mental, you can see a lot of information to allow you to be in a trade. You know, you got the hidden, the regular divergences. They are not always going to play out. Why would you want to go for something or catching a fall now if you're not going to on these lower time frames? But what it does tell you is, well, actually, I want to ignore that. Why? Because ultimately, why would I want to go and try and scalp a bottom when there's no bottom in sight? The bottom actually is very obviously here. Wait for it to happen, see where there's going to be a potential trade. In my opinion, that's the best way to do it. So if you want to get the free version, link below, try it out, see what you think, have a little play around with it. If you do want to get the professional version, it is in the Traders Lounge. You can get it on an annual fee or a very simple monthly fee. There's also discounts there too. So there we go. Hope you enjoyed this video. It's a little bit of a walkthrough. Everyone trades and invests very differently. That's kind of how I like to look for it. Personally, I'm a momentum trader. I like to positional trade as momentum. Everyone's different, but it will help you.